everybody. This is Paul Sion, Realtor with United Real Estate, licensed in the state of Ohio and Kentucky. And with me today is a returning guest, Walt Wollet with Fifth Third Bank. He was with a different lender in the past, and now he's with Fifth Third. Walt, how are you doing today?
I am fantastic today, Paul. We're out here at the on my new piece of property that you helped me acquire, and I'm excited to do a podcast. It's been a while.
Yeah, that's one of the reasons too that we decided to do this podcast. Is hey, you're a lender. I've been through the process myself of buying my own house as a real estate agent, so I know how it is. So we wanted to get the perspective of a mortgage lender, buying the house. So I guess let's just start from the very beginning. What's the first step that anybody has to do if they're interested in buying a house? They leave out the real estate agent. They know they want to buy a house, and they're going to talk to a lender at Fifth Third, and that happens to be you. So what's their first step?
So for my first step, and we talked a little bit before this about just being an active consumer, and we'll get more into that. But it really what I would tell people is that you need to do an honest debt analysis, and you honestly need to look at budgeting.
Okay.
So you need to, when you're buying a place, you need to take in all those costs are. So what are the costs that you have to pay every month? Is there do you have a $40 credit card bill that you pay every month? Your cars, your auto loans, whatever you pay every month, and you need to analyze that, just so that way you're not wasting your time, right? So it's like the first thing I would do is get pre-qualified or talk to a lender. And I'm an insider, so I kind of knew what I had to do. And what I did was before I got pre-qualified was paid off all my credit cards because I could, just to make sure that when my credit was pulled, I had a score that was higher so that I could get the best rate and terms that are available. So that was a big thing that I did. Your credit score, a big part of it is factored by credit utilization. So a lot of times people that are borderline approval, if they can get added to a secured card or get added to another account, an authorized user account, or pay down credit cards, say from 70% to below 50% utilization, then their score could shoot up, and we can qualify them for what they really want to buy.
Okay.
So I would say that would be the first step, is always to just talk to different lenders and talk to different people. Don't go to one lender and just trust them. And I wouldn't want anybody that I work with to just talk to me. I want them to do their own research, and I want them to know that I'm going to take care of them. Now, if they find someone else that maybe is promising them better numbers or whatever, I hope that we can talk about that. But at the end of the day, we have to perform and do what's best for consumers. So.
Yeah, definitely. Yeah, looking at that, going back to the credit score, and you'd mentioned credit score affects your interest rate, and do you have a breakdown basically of what credit scores and how much impact on your interest rate is? I mean, is it something easy to quantify, or is it a little more computer oriented than that, or computer algorithm oriented than that?
So this is another question where it gets into every bank is going to be different on that account.
Okay.
So you have the agencies, Fannie and Freddie, right, that back these loans and securitize these loans, and they set a lot of what the fees and charges are on those products.
Okay.
And those are built in to the actual interest rate and to the actual loan in a lot of cases.
So those are almost like base fees then.
Right. But then other people, so what a lot of banks will do, and Chase as an example is notorious for this, but so say they don't want a certain loan, they still legally have to offer it, but they'll raise the interest rate on that product so that they don't have to originate or service as many of those loans. So, truthfully, certain companies will do that with government loans if they don't want to deal with the potential risk of having the agencies force them to buy back those loans if there's any sort of auditing or documentation issues. So they'll just set their margins, or they'll set their rate really high to try to dissuade people from applying. And you're seeing that a lot with refinances at some of the larger lenders now too, just for the same exact reason.
So why don't you tell us about some of the hiccups that you had happen to you in your specific loan while you were trying to buy a house?
So I would say that any hiccups we had, Mike, who helped us out on this purchase, did a great job with, as soon as stuff came out of underwriting, or as soon as underwriting came back with a message, he would reach out to me, and anything we needed we would get. We did a good job together, me being an insider, of documenting everything up front that we needed to. So any letters of explanation and any sort of thing like that. I'd say that the biggest hiccup was probably, and especially right now with COVID, was the appraiser.
Okay.
So we had required a desktop appraisal on this purchase, which is essentially a drive-by appraisal. Now, typically, in any other market, a normal market, I guess you might say, you would have that appraiser reach out. They would be reaching out to the selling agent, so the agent would know, oh, okay, the appraiser has seen the property, they're out here.
Yeah, they're physically walking the property.
Right. And
almost like a home inspection.
Right. And so that didn't happen with this purchase. See, I think he might have pulled into the back, a little bit and checked out some of the buildings and took off, right? And then the appraisal came back. Luckily it was all good, but I think one of the hiccups was just that seller not knowing that the appraisal was done, and that the seller's agent not knowing, and that kind of elevated their anxiety, right?
Yeah. So, I do remember talking with the seller's agent, basically, hey, when's the appraisal happening? And I did ask the agent, did the appraisal call you? And that kind of sent up red flags on her part unintentionally, because they wouldn't be contacting her. They would just be driving by, looking at the back of the building, or walking the building, not really looking to get inside the building.
Right. But as far as just hiccups now and generally in this market with loans, is a big thing I talk to with my team and my manager all the time, is just getting things in as clean and as clear as possible. So what I think a lot of, especially first-time clients, don't understand is you cannot tell me that your student loan payment is this when really it's this. And you cannot say that you make this much money when really you make this much money. And every little detail of that application is going to be verified and is going to be put through extreme due diligence. So with that said, like where we run into problems, or where any lender will run into problems, is when the story changes. So it's okay, we're calculating 40 hours a week for your income, and then we get the verification of employment back, and it's 32 a week, even though your recent pay stubs say 40. Like those kind of issues I think everyone runs into and deals with, and it's just like we have to have it perfect. So if we're talking about homeowners insurance numbers up front, and this is what they are, and this is what they need to be, then that's what it is. So we can't have radical changes in process, or else you're going to have a loan that goes on forever and ever.
Yeah, so making sure you dot your I's, cross your T's, making sure the information is 100% correct. I mean, probably one of the best ways to do that is, go on your own, pull your own credit report, make sure you see all your accounts, kind of like you had mentioned in the beginning. Take a look at all your debts and your assets as well. Make sure all your income is properly documented. Make sure all that's documented. And, the numbers that you're reporting are what is being reported to the lender. That way, it's a smoother process. Underwriting is going to have less questions, and your loan will go through easier.
Definitely. And one thing that I advise a lot of people too is I like to have, if possible, if time permits, have that credit conversation with the clients up front. So even 2 weeks before they're ready to shop, or even months before, ideally, we talk about their credit. And then there was a case recently with a friend of mine, a client who's a doctor, and he had mentioned, I have this collection from this utility, and I don't know where it came from. And there's laws that debt collectors and that people have to follow, and a lot of times, what we're seeing in the world, right, is with corruption and people not following rules and people not doing what they need to do. A lot of times, you as a consumer, and you have rights to dispute that and to go and try to clean up that information yourself. The credit bureaus legally every year have to send you a copy of your credit report if you request it. So, and I'd always advise people to do that, definitely.
Yeah, take a look at it. You mentioned fees earlier. We talked about a little bit about lenders' fees, and let's talk a little bit more. I mean, what we have the base fees that these other like government sponsored entities, so to speak, the Fannie Mae, Freddie Macs, that they charge. What sort of extra fees are banks tacking onto the loan, and what are some of the reasons for these fees?
So every loan requires people that work on it. So one thing is that I always say is, I would advise consumers to look at different lenders and talk to different people. Now, I'll tell you right now that cheaper is definitely not always better. And a lot of times there are lenders out there that, they're overpriced and they're at the top of the market and they know it. And so I guess there's a huge discrepancy between fees in various programs and various lenders. And it's just a matter of going and asking those questions. Okay, why is the processing fee this? Why, what's this underwriting fee? And then it's always okay to ask, well, hey, is there anything we can do about this? So in my case, when it comes to the fees or the stuff that I had to pay for, so certain things that the bank paid for because I'm an employee, which is a great benefit to us, and help me save money as I bought this place. One thing that a lot of buyers don't think about is all those incidental fees. So every home inspection is $400 to $500.
Yes.
Every just buying garbage cans out here was $150. So there's these costs that come up. The wax seal on the toilet, stuff will come up, and you just have to make sure that you have that budgeted in and that you're prepared for those expenses. And so like a lot of times if there's multiple people living in a house and it's one person on the loan, like that's when I'll look at it and be like, okay, well, really there's 3 people that are going to be living in this house, 3 people sharing expenses. It's different. But those kind of loans are always more difficult, so you really want to make sure that, you understand all the costs involved, especially if your debt to income ratio is higher as it is, because you have a lot more expenses. So
yeah, we've been talking about those fees. I mean, it's almost an example is some of the car dealers, used car dealers, or even new car dealers. I mean, they'll you get through the negotiation process, you got the price on the car, and then you go talk to the finance manager, quote unquote. And that's where they start trying to tack in all these, hey, let me throw this warranty on you. Let me throw, payment protection in case you're disabled, can't pay. And so that's where they start packing in things. They're basically fees. They're fattening the bottom line of the car dealer, of course, and that's part of their job. But at the same time too, as consumers, our job is to look at that critically and say, do I really need that fee? Do I need a no payment fee, because I'm disabled or I'm not currently working? But at the same time too, turn around, look at your auto insurance or look at your homeowner's insurance. Are they providing some similar coverage that that you would need or would avoid it? At least in that case, in the auto example, it's not so clear cut. You always don't have that type of thing. Your homeowner's insurance not necessarily going to cover you. If you can't pay the mortgage, but there might be some other benefit or some other protection. Your employer might be offering something for you too. That why pay the extra fee to the lender? When it's saving you money and they're just trying to pad their bottom line versus you trying to save your dollar. And it's a long-term purchase. You're investing for 20, 30 years. More cost, the higher the interest rate. I mean, the more you're paying over time.
Definitely. And that's why it's so important up front to, you have power as a consumer, and lenders, if any lender doesn't want to be competitive, that's a red flag probably.
Yeah.
So especially with us and the bigger banks, we have, we did until, kind of some of the new fee with Fannie and Freddie for refinances, kind of cut into our margins a little bit. But we're willing to do, we're willing to do whatever we can do to win business, but at the same time we have to pay people a fair wage, and we employ Americans, so that's the that can be a difference, right?
Yeah.
But it's just a matter of like weighing out things, different, this lender might have the best deal, but they might take a really long time to get it done. This lender, they're really fast, but they're very expensive, and what's the trade-off? And so, it's always good to talk to multiple people about that to gain a broader understanding for yourself.
And how are they giving those fees? I mean, I'm presuming you need to get a credit report run.
Right.
Okay. And then how big of an impact is that? You're getting multiple credit reports. Let's say I talk to 3-4 lenders and I say, okay, go ahead, run my credit. If I do it over the same day or a couple of months, is it a big difference?
So as far as a hit on the credit report,
yes,
it's 30 days. So
okay.
You're allowed. What sends a red flag to the bureaus is when you shop for a bunch of different things. So say that when I was buying this house, I also had my credit pulled for a car, and I had my credit pulled for a tractor, and I did all this financing stuff. Well, my credit score would just start to tank because the way the agencies, that their algorithms are reading that is this person doesn't have any cash, right? They're financing everything. Here's another credit card inquiry. So it's all within that 30-day window. So you get your credit pulled once with a lender, and then you have 30 days, and you could have the credit pulled so long as it's a mortgage inquiry and not any sort of general finance inquiry, and it's how they're coded to the actual credit providers, right? But so long as it's a mortgage inquiry, it's only going to count as one hard inquiry. So the credit agencies, they don't want to dissuade people from shopping for mortgages because we need to have a fair and ethical mortgage market. And it is, it's definitely better than at what I've heard about, from some of the people I work with in before 2008, right? But
yeah.
Yeah.
So comparison shopping it can be a big saver. I mean, you're thousands upon thousands over the life of the loan.
Definitely.
Going back to your own personal experience, looking, hindsight is 2020. Looking back at the whole process, is there something you think you could have done better that would be good advice for somebody else?
Yeah, I think I probably should have paid off all my debts sooner.
Okay.
So that was one thing is I really
when you say sooner, how much sooner in say prior to applying the loan, how much quicker should you have done that?
So just as an example, I had there's a rental verification company, and I paid them a fee to add my rental trade lines to my credit report.
Okay.
And those were not added before my credit report was pulled. So just like things like that I had done to strengthen my credit profile and my score, they weren't reported right. Okay. And then I paid off all my cards, like I said, but some of them were still reporting balances when we pulled. Yeah. So it was kind of like
it might take 30 to 60 days for some companies to report that.
Exactly. And here's what I found out is that most companies will offer what's called off-cycle reporting. So you can call them like, hey, I'm going to get my credit pulled for, this investment property loan, and I just paid off this credit card. I'd like it to report. And so some of them were honest with me, and they're like, oh, well, yeah, we can report. And they did. And others said they did, but they didn't.
Okay.
And it's just the nature of it. So I would say a lot of that stuff, I would just get it done as soon as possible if you know that that's going to happen. Like I had my credit pulled twice for this home purchase because the original credit report expired, right? And I did that in February.
Okay.
So I knew in February, like, okay, that's what my actual score is, and then I used that credit report to attack some of the balances and any other derogatories that were keeping my score lower than where I wanted it to be.
Okay.
So.
All great advice and all great conversation. So I appreciate you taking the time to be on this podcast with me. Any final thoughts?
I just say everyone, stay safe out there, And it's just like with what we're talking about with lenders, and with getting different opinions and different perspectives in the world right now. That is what I would advise everyone to do. So a lot of people, they're used to watching CNN, they're used to watching Fox News. They get their perspectives and their opinions, from this one place. And I think that, especially right now, as things are kind of, getting a little crazy,
up in the air.
Right. We need to all kind of like, realize that everyone's a person, and that, people are people, and that we have to do a better job working together. We have to hold our leaders accountable in this country.
We're in this together, basically.
Right.
Yeah.
And then that's all I would say to people is, just, and especially if you're working with mortgage lenders right now, we're all stressed out, and we're swamped, and I promise you're not the only client. So it's like, just be patient with people. There's a lot of people that behind the scenes that work on these loans, and your loan originator is going to do their best for you. But a lot of times things happen, unfortunately, and you just need to take it as a learning experience and move forward. And I think that's what our country needs to do with a lot of this craziness right now.
Yeah, wholeheartedly agree, and awesome advice. Thanks again for being on.
Awesome. Thank you, Paul.